Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex Quick Look, and take a look at the dollar versus Canada. Today's date is June 18, 2024. Let's get started. If we look at this currency pair, and I'm going to put a red box right around here between about nearly around 136 up to 138, around 200 pips, and nearly all the trading volume has taken place within that this red box. Within it, there's lots of ups and downs, including in this trading this week with a move to the upside and move to the downside, move to the upside and move to the downside. So it's hard to. There isn't a trend. Okay, the trend is up and down for this currency pair. Nevertheless, we as traders try to find technical levels that will give us little clues as far as the bias goes, and perhaps a shift in the bias as well. And if we take a look at the 4-hour chart here, the 100 bar moving average on the 4-hour chart and the 200 bar moving average on the 4-hour chart is being approached here with the current price trading at 137.10. The 100 bar moving average is just below the 137 level at 136.99, and then the 200 bar moving average is at 136.86. Just above that is the 38.2% retracement of the move up of the range since the high price that we saw in the month of April. So that level is also in play near the 200 bar moving average at 136.87. So if the price were to move below this area right through here, that would increase the bearish bias, have traders perhaps looking toward things like this trend line or this swing area or the low of this red box right through here. Near the 136 level, 136.05 to be exact. Also near that level is a 100-day moving average, which increases the level's importance as well. So that is the game plan or the roadmap if the bears were going to take more control. Conversely, if the buyers are to take control, they need to stay above this area. Note that last week the price low came in right at the 200 bar moving average. It found support buyers and pushed back to the upside. So that's an indication that, technicals are still in play, that traders are still paying attention to it. And it also is an indication of the importance of this area as a barometer for bullish above, bearish, and below. So be aware of that level as well. Now, in between or in trading here today, the price did move back below the 50% retracement of the same range since the April high and the May low. That level comes in at 1.37173. So there's a little bit of a tilt below that level. It keeps it gives the sellers a little bit more control. Also, if we take a look at this chart from an hourly perspective, it gets really messy through here, but the price is also below the converged 100 and 200 hour moving averages. So this level comes in at 137.36. So stay below that level would give sellers the advantage as well in the short term here. Admittedly, the price has been above and below both those moving averages of late, indicative of a market that really doesn't know which way it wants to go. And that's okay. So there's my technical look at the dollar versus Canada. Trying to make sense of the ups and downs that we're seeing. I would give the sellers a little advantage just intraday, but there's work to do on the downside with the 100 and 200 bar moving average on the 4-hour chart as key targets, key barometers for traders going forward. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.